The global banking industry has long been a cesspool of corruption, greed, and criminality, and Credit Suisse is no exception. This banking giant, second only to UBS in Europe, has been mired in a series of scandals and controversies that have rocked its foundations and left investors and stakeholders reeling. From regulatory fines to money laundering scandals, Credit Suisse has been plagued by one crisis after another, with its latest fiasco threatening to push it over the edge of the abyss. But, before we get started, are you worried about the status of the American economy? Do you want to stay ahead of the curve and make informed decisions? Look no further than Market Meltdown TV. Our channel provides expert analysis, up-to-date news, and practical tips to help you navigate the upcoming recession or even worse, depression. Don't miss out on our latest content. Hit the subscribe button, give us a thumbs up, and share with your fellow Americans to join the Market Meltdown TV community today. The trouble started for Credit Suisse in early 2021 when its investment in private firm Greensill Capital went belly up, costing the bank a staggering $5 billion. Greensill Capital, which provided working capital finance to small and medium-sized enterprises, SMEs, globally, was one of Credit Suisse's major investments. The bank had even marketed these investment funds to its clients, including high net worth individuals and institutional investors. But when Greensill Capital declared bankruptcy, Credit Suisse was left holding the bag, and investors were left out in the cold. Credit Suisse's problems only got worse when it announced that it would delay its annual report, citing queries from the U.S. Securities and Exchange Commission, SEC, regarding reports from prior years. The bank's CEO, Thomas Gottstein, said that they wanted to appropriately respond to feedback, which led to material weaknesses in the financial reporting controls. Credit Suisse's independent auditor, PricewaterhouseCoopers, issued an adverse opinion on the effectiveness of Credit Suisse's internal controls over financial reporting. For a bank of Credit Suisse's stature, such lapses in financial reporting are not just embarrassing, but downright catastrophic. When a bank loses the trust and confidence of its investors and stakeholders, it is only a matter of time before it collapses like a house of cards. Credit Suisse now faces a heightened risk of restatements or other accounting problems, which could further erode its credibility and reputation. Adding insult to injury, Credit Suisse's largest shareholder, Saudi National Bank, has refused to give the bank any more money. The bank's spokesperson said that the answer is absolutely not, citing regulatory and statutory reasons for the refusal. With Saudi National Bank owning just under 10% of Credit Suisse, any additional investment would result in the bank owning more than 10% of the company. This would trigger additional regulatory requirements from Swiss and European authorities, which the bank is unwilling to face. The fallout from Credit Suisse's woes has been catastrophic. The bank's share price has plummeted, its bonds have tanked, and the cost to insure the bonds has skyrocketed. This has sent shockwaves throughout the financial world, with investors and stakeholders alike left wondering whether Credit Suisse will survive this latest crisis. But this is not the first time that Credit Suisse has faced regulatory challenges or scandals. In 2020, the bank was caught spying on its senior employees, resulting in the CEO's resignation. The bank has also been embroiled in money laundering scandals, with the Swiss Federal Criminal Court finding Credit Suisse guilty of failing to prevent money laundering, marking the first criminal trial of one of the country's larger banks. Leaks have also surfaced regarding depositors bringing in illegally sourced money to the bank from Venezuela to Egypt and other countries worldwide. The future of Credit Suisse looks bleak, with little hope of recovery. The bank's reputation has been tarnished, its credibility shattered, and its investors and stakeholders left holding the bag. With mounting regulatory pressures, declining profits, and a lack of investor confidence, Credit Suisse may be on the brink of collapse. It remains to be seen if Credit Suisse can recover from this situation, but it will require significant changes and a commitment to rebuilding trust and restoring confidence in their operations. Only time will tell how this situation will play out and what impact it will have on the global banking industry. Thanks for tuning in to Market Meltdown TV. We hope our expert analysis, news updates, and practical tips have helped you stay ahead of the curve in today's volatile market. If you enjoyed this video and found it helpful, please hit the like button, subscribe to our channel, and share with your friends and fellow Americans. Your support helps us bring you even more valuable content. Remember to hit the bell icon to get notified when we release new videos. Thanks again for watching, and we'll see you in the next one.